Hello, everybody. So I hope we're all having an awesome weekend. This is 50 pips in the house, 23rd 03 2014. Not making any trade calls or recommendations. As you and only you are responsible for the trades you may decide to take. The fact you're listening to this means you've read, you understand, you accept all the disclosure disclaimers on the blog, understanding that we're just performing some technical analysis in a learning context for educational purposes only. So what's going on here? Well, again, I hope everybody's having an awesome weekend and is getting ready for the week ahead. Just keep in mind that this should be an interesting week, especially for Euro, because we start the week with all the PMIs out, and then we've also got the IFO on Tuesday, so that's really going to be interesting. So we should have a fairly good idea at the beginning of the week if Euro is going to continue this correction or catch a little bit of a bounce. And then there's some other interesting data points here and there, but nothing too spectacular. Okay, so let's take a look at the charts and let's go through some futures and let's go through some Forex and keep it as sweet and simple as possible. ES, what's going on the ES? So we discussed yesterday, last Sunday, when we were pressing lower, we said it was all about the 1850, and we would not be surprised to see this trading right back up into the 1870s. Okay, so pretty much we had that press down, then nice little move back all the way into the 1850s, which was our pivotal level for the week. And the moment we started holding this 1850, as we'd said on Sunday, we'd expected those 1870s to come relatively quick, and that's what we got. Now, I think what caught a lot of people off guard was the action on Friday, as we opened pretty strong, and then all of a sudden we started to let go. NASDAQ actually led that on Friday, but again, don't forget it was quadruple witching, so we'll have to see how this carries on into the week. I think common belief is that usually price tends to continue to extend in the latest direction on these OPEX Fridays, on these closes. So I think most people will probably be expecting some more of a down move on Monday, at least going into the week. So the market might be positioned as selling any rally to try and get a move back down into the 1850s. And again, I wouldn't be surprised to see some more downside pressure. But as far as I'm concerned, nothing much is changing here. We're still stuck in 1900, 1850, 1800. I'm still looking at these 1850s and pivotal, okay, and to guide. So for me, daily closes below those 1850s, then I would continue to say, okay, how we ended this week is going to carry on. And next week, we're holding heavy, and as long as we hold below 1850s, I expect the market to try and take a stab into these lows, 1820s, fairly quickly in aggressive fashion. And if it takes those out, then I think 1800s will come relatively quick. Equally, if we go into the week and we try to take out the 1850s and we can't get any traction below 1850, we can't get any daily closes below 1850s, I'd expect 1870s to come quick, and then if we take those out, those 1900s to come quick too. So really not a lot has changed, but still some very tradable moves in the market. Okay, what's going on crude? Crude, not a lot has changed, exactly what where we were, and pretty much respecting the chart as we discussed. We're looking at this, came back, bought the 50 back of the retracement for lows to highs, and what we said is this is going to try to extend a rotation higher. If the shorts are going to come in, they're most likely going to come in at the 100 mark, also with a confluence with the 200-day moving average. If the shorts want to keep the pressure on, they need to smack this down at that 100 level and keep the closes below the 200 moving average, and that's exactly what's happening for now. So as we go into the week, no big change. Hold and daily closes below the 100 level, we'd expect the market to try and take a stab at those lows. If those get taken out, 96.50s calling. If the market can't hold below that 100 and that 200-day moving average, then we'd expect it to try and continue this move in extension to go back into the 105s, then 108s, etc., etc. So let's see what happens on crude. What's going on gold? Where's our friend gold? Gold, we talked about the range 1400, 1350, 1300, and we were expecting this to try and make an aggressive run for the 1400 level. So we moved all the way back down. We got a bit shy and got sold off hard. What we were looking at, we have these 1350 as a pivotal level. We came back down, again, pretty much in line with what was happening in terms of flow and the geopolitical risk. And what happened here, after we held, we got into these 1350s, then bam, we broke lower. Now, it's basing ahead of this whole, you see we had all this support here. Actually, I suspect trendline players will be looking at this trend line here on the daily, and you see that the market bounced pretty much smack at that trend line. So that's what I'll be looking at here, but really, as far as I'm concerned, it's still all about, similar to the discussion we had on the ES, it's all about the range 1400, 1350, 1300. Hold below, daily closes below the 1350. Expect this to trade heavy with potential for moves back into the 1300, back above the 1350, daily closes above, trying to move back into the 1400, so it's smack at that pivotal level. Not a lot has changed, okay? What's going on the other chart? So let's make sure I don't forget anything. What's going on Aussie? We discussed the fact that it's really all about the 0.90 to 0.91. That's the those are the levels to watch, and that's the big chop zone. This is trying to attempt an upside rotation. Okay, you see, even though we keep on getting sold in a sloppy fashion, and you need to respect the fact that the market can't hold a bid above the 91 level, every move down keeps on getting bought. Here we're on a 4-hour chart with this 200 on the 4-hour chart keeps on catching a bid, and here very nice confluence with this 200 right at that 90 level, caught a bid, and bam, we're right back into the 91s. And where do sellers come in? Surprise, surprise, right back at the 91s. So as far as we're concerned, same thing, we're in the range 91, 90s chop range. You need daily closes outside those levels to give us most likely what is going to be the next attempt. So if we get daily closes below the 90, we'd expect this to try and accelerate lower back into those 88.80s. If we get daily closes above this 91, we expect this to continue to try and accelerate higher back into the 91.60s. Keep an eye that the first big level of resistance to the upside is going to be this 200-day moving average that is coming down and slowly getting closer to where we're trading. So don't forget that 200-day. But as we stand, it's still about this range. Broadly speaking, we'd still expect this to stay relatively range bound, but these are the levels to watch. This is what we're focused on in terms of the Aussie chart. So what else we got? Euro JPY. A lot of people asking me about Euro JPY. Not a lot is going on, right? We're still stuck in this range. This is a pivotal level right where we stand around the 141s. Daily closes outside of the shaded area we have here. We'd expect market to potentially try to accelerate quickly and try and take a stab at that 139, which we talked about as the money line, okay? But basically move lower. That's going to be attractive. We start to get daily closes, then these previous highs will attempt to go all the way back into the 145. So right here, we're just stuck at a pivotal level. Not a lot has changed. What else is going on USD JPY? Very nice moves off those lows. I think a lot of people were not expecting these tight lows to hold into the FOMC, but you know, chart is a chart, so we just focus at levels. Our assumption was if these get taken out, we'd expect to see a move right back into those lows, but first assumption was that these would hold for a grind higher, and then we'd expect to see sellers coming in right in that pivotal area, which chop zone, which we discussed before, right? So all in all, I think according to plan this week, got a nice little bounce here, moved all the way back into these highs, and that's where the sellers came in, okay? If you step back on the chart and just let's zoom out, that was the level that had been sold off aggressively quite a few times, okay? So what I would be looking at going into the week is not a lot has changed. The chart is the same and the levels are the same. So what I would say, you know, going in early in the week, as long as the sellers keep on capping here, we'd expect it to stay relatively stable inside this chop zone. We'd expect to see, unless something happens on the geopolitical front or in terms of data coming out, we'd expect bids, aggressive bids, still trying to support these highs, and so choppy offers here and buyers here. If we break above this, then we'd expect to see 103s print, break above 105s, 107. We've discussed that a lot. But as long as we're stuck inside this area, expect to see more choppy action, okay? So far, so good. It's been moving around fairly clearly, I would say. So let's look at Euro and Cable. What's going on Euro and Cable? So I think what we can focus on is basically, let's start with Cable. What we discussed, and we discussed this a lot of times, we talked about this this zone, right? We had it on the 4-hour chart, basically saying this was the chop zone, and basically it was all about that chop zone, and unless we saw a daily close outside, we expected this to continue to trade choppy, you know, and there were a lot of nice opportunities both to buy dips into this zone and sell, you know, so there's a lot of interesting trading here. But what we said, once we get a daily close below, we expect those 165s, 164.50s to come relatively quick. Okay, so we got the daily close and then it continued to accelerate, it continued to stay heavy, right? So we said as long as you can't get those daily closes outside, it makes sense to try and fade the zone. But once it closes below, you know, you don't want to stay stubbornly long. Let it come to you, let it come to the next support level, and that's exactly where we did, where price came into. So going into the week, what I'd be focused on is, again, with this kind of breakout, most of the shorts will be looking to sell any rally back into the breakout zone, right? Breakdown zone rather. So into the week, look at this as mid-range, as a choppy mid-range. For this to take the pressure off in terms of the short side, pressure on, so we need to see this close not only, I'd say, back above inside that zone, but we need to see this close comfortably back above 66.20s. As long as we're below, it's still pressure on for more downside. And if we get a daily close below these 64.50s, then I would expect it to try and see a bigger correction, potentially back down into the 162.60s, 163 level. So this is the way I'm looking at the chart going into the week, you know, and both these levels are going to be important because to the upside, this is the breakdown zone. So this, a lot of the sellers will be looking to sell this. And if we break down lower, this is where we caught that bid for that next press higher. So this is going to be a really important zone to the downside. So that's what I would be focused on cable going into the week. Clearly heavier than euro. And then what's going on euro? So this is the chart we posted on the blog. We discussed this whole sideways range, right? The fact that we were chopping here, and what we said, a breakdown below, again, we'd expect it to get some additional traction to the downside back into that breakup zone. So we talked about as long as we held above 138.20s, 138.00, it was likely going to continue to hold a bit of a bid tone. But if that let go, if we start tripping stops sub 38s, you do not want to try and catch this aggressively. You want to let it come to you, right? And that's exactly what happened when it took those out, then aggressive to the downside. Where did it start catching bids? That last high here, breakup zone, very important level, and that's exactly where it's catching a bid. So that's going to be very, very important going into the week. You know, and a lot of people are going to be looking at this in a lot of different areas, right, in different ways, you know, with moving averages, whatever you want it. But essentially, you know, it's a nice previous resistance acting as support. So going into the week, the way I'm looking at this, as long as those lows hold from a daily close perspective that we put in last week, then I'd expect this to try and quickly take a stab back into those 38.20s, right? And if those lows go, especially from a daily close perspective, I'd expect this to come back down into the 37.10s, 37.00. I mean, you can look back on the chart, even on the daily or weekly, and you see why that 37.10s, 37.00 is going to be so important, because that was that big resistance, right, that we broke through. That's going to be really, really important. Should we get some more downside, I think that 37.10, 37.00 is clearly a level that needs to be respected. Now, keep in mind that going into the week, as long as we don't get, oops, not what I wanted to do, as long as we don't get a daily close back above this whole 38.20 zone, this is likely going to continue to hold heavy. Similar to cable, the shorts will be looking to sell any move back into this breakdown zone for the continuation lower. So base support for the week, key pivotal zone, starting resistance for the week. As we go into the week, all the PMIs, all the IFO, if it stays below, likely heavy. If it gets back above and it gets traction to the upside through the PMIs and the IFOs, then do not be surprised to see this trying to make us a quick move right back to the scene of the crime, which is where we started to sell off aggressively from. Okay, so I hope that was interesting. I hope that's good. I wish everybody an awesome rest of the Sunday, wherever you may be. If you like the content, please don't be shy about sharing it, liking it, or whatever you want to do with it. Have a great one. Thanks for listening. I'll post this to you guys on Twitter tomorrow. Have an awesome one. Take care. Bye-bye.